Good morning. Good Monday morning to all our friends out there. It's the last day of April 30th. It's going to be a little chilly in the morning, but it's probably warming up now. Welcome to the Ordinary Joe Show. It's Monday, and as usual on Monday mornings, every Monday, we cover the subject of finance, business, entrepreneur. But keep in mind, we want to include careers as well. A big headline on business news this morning, titled An Awakening, Major Canadian Pension Funds Wade into Pot Stocks or Your Cannabis, Marijuana Stocks in the Market. This is a touchy subject for sure. There's many friends of mine and listeners and followers as well who are on the opposite sides of this debate. So I probably not go in depth. I have my own personal opinions about it, but we'll see as the day progresses if we are going to touch on a little bit, give a little commentary on the issue. But before we begin, just want to invite you all to check out an interview I had last Saturday as the keynote guest at Lunch Break Radio in Pinoy Radio up at Vaughan. So it's half in English and half in Filipino, so I apologize to all my non-Filipino followers and friends who might not understand half of the conversation. I would say about 60% is in English, so if you're very patient, you'll still pick up something. A full disclosure before we begin the show. As the show progresses, we will talk about some financial concepts and insight. None of those that I say here should be taken as professional advice. Any financial thoughts and conversation you hear here are all of personal opinion and not for professional advice. Please see your licensed professional financial advisor before implementing any strategy on your finances. Friends, welcome back to our Monday's Finance, Business, and Entrepreneur podcast. And today, we're already on the 4th episode of this very uplifting, very enjoyable, entertaining, yet very serious, very professional podcast about business, about finance. We are going to add to the mix of this conversation also for career pursuers. I know we mentioned that brand building is not only for building your business as a brand, but also for personal branding. And you can accomplish building your personal brand as well as building your resume and your credentials for your career. We just want you to, hoping that you will also pursue, other than finding employment for an employer, pursue and build your brand as an entrepreneur at the same time. Having said that, many people have been very, very successful in building their personal brand. That becomes a business brand. Who started off as employee or as an agent of something bigger, a bigger company, a bigger corporation. But just keep in mind, when we are putting all of that energy, all that time, clocking in, clocking out, appearing at the office by 9 o'clock, and not being able to free yourself until 5, that all that energy and the time, the resources that you have for that day was given to build the company you're working for, and partly building your career, building your portfolio, building your profile. But that's all according to how your bosses or colleague perceive and appreciate the kind of value that you have brought into the business. And it's all subjective, but just keep that in mind. But also, like I said, having said that, there's two sides of the coins. There's value in that as well. You cannot discount the value of branding that you carry on or you accomplish building for your own portfolio, for your own profile, with the experience that you gain from working for other people. Just don't spend the rest of your life doing that. Just don't spend all your energy, your effort, and your time building other people's brands and not putting more energy on building your own brand. So let's take, for example, last night there's a big win between the Blue Jays versus Texas Rangers that happened here in the city. Last night is 7-2 lead. So the Blue Jays won last night. And many of my very close friends know that I am not a very passionate sports. I'm not an avid sports follower of any kind, except for boxing. And I wouldn't even say all boxing. That was only except for Manny Pacquiao's fights back when he was active. So recently, I'm not even sure if he's still active in boxing anymore. I know that he had a big fight in Australia that most North Americans didn't hear of, but it was still big in Asia because it wasn't carried through the usual boxing network that we are used to here in North America. So I'm not even sure. I haven't been following, so I'm not a big sports aficionado. But I appreciate the business of sports and the branding of athletes that they build for their names in the field of sports. It's also the same in the field of the entertainment business. The films, the music, even for books, right? So we have on Thursdays, on Fridays, we have films, books, music, and art podcasts talking about the products, but also the business side of it. So all of our podcast series are actually kind of intertwined. It can overlap, interconnect with each other in subject. Because, for example, we have our Wednesday food, fine wines, and festivals podcast, but there's business side on promoting food brands, restaurants, food bloggers have to build their brands. Yeah. So wine connoisseurs and all that. It's all about branding. And so please check out many of our other podcasts in the F series of podcasts. We are hoping to groom co-host who will take over as host in the future for those prototype podcasts series that we have created here at the Ordinary Joe Show. Because I want to be able to focus on the marketing side, the production, the directing, just sort of like be behind the scene. Although I will maintain and I will retain some of the podcasts as my personal hosting gig. But I would really love to give away hosting to upcoming and whoever's interested and who's qualified, right, to take up the offer and be the voice of that particular podcast. And slowly I will step aside and be the co-host instead of the main host of certain podcasts that I create, and then move on and create new ones that are relevant, that are necessary for the requirements of the listeners. Because like I said, we are listener centric, we are viewer centric. We very minimally exercise marketing myopia. Myopic marketing is not our main strategy here at the Ordinary Joe Show podcast. However, we do a little bit of that because we need to be true to ourselves as well, focusing on our own strengths and we do have our own principles. We do have our own core principles here that we follow. Having said that, we really want to hone in with what the Ordinary Joes are into. And some of those, we have to acknowledge that the general public, they have some sort of preference, and you can see that in trends and data analysis, what people are listening to, what people are watching, and what people care about. But taking that with a grain of salt, we have to understand that in data analysis, we also need to do a little bit of psychological and sociological analysis as well, because many of those desires and interests and preferences probably are there for the ordinary Joe, not because they naturally want to, but because it was dictated to them through media influences and whatnot. Stick around. We'll just go in a few second break, and we'll be back right here on Monday Podcast at Ordinary Joe Show. Please don't go away. We'll be right back after these short messages. Hello, a friendly reminder to all our followers and listeners on iTunes, Spreaker, and SoundCloud. Every Wednesday, if you like the topic of food, fine wines, and festivals, every Wednesday, 12 p.m. Eastern, 11 a.m. Central, and 9 a.m. Pacific, we talk about everything about food, restaurants, new restaurant opening in Toronto, events, films about food, and all kind of stuff. So please check us out on Wednesdays on Wednesday Podcast here at the Ordinary Joe Show. Welcome back to the Mondays podcast here at the Ordinary Joe Show. Mondays, finance, business, entrepreneur podcast. A little breaking news here. Apple traders bet on 8% drop as earnings approach. Apple will be reporting their earnings tomorrow, May 1st. Wow, it's May already. And a lot of day traders are banking on a little correction, an 8% drop, because they felt that Apple was already over 10% of their highs in middle of March. And you know, that's what day traders do. They look at trends, they look at stock market behaviors, and they trade on it to make a profit. And many of them trends are quite predictable, but it's, in my mind, it's trivial and quite controversial, because I think the traders are actually the one who's moving the market and churning off every ups and downs. But it's a personal, for your personal purpose, I think I would recommend people understand the strategy of short trading, how to short a market, especially if the market is overinflated. You can actually profit on the downturn of the market. So if you are invested long term, you can actually just leave your assets in there and let it grow over time, because the trend is always upward over time. However, the inflation is a real thing, and inflation is actually eating up on the value of your wealth. And because we all rely on monetary wealth as our wealth, most of us, many also invest on real estate. But whether it's monetary wealth or real estate wealth that most people, and if that is your instrument of choice to invest and grow your wealth, keep in mind that inflation is actually what causes a lot of these assets to grow. So you are counting on inflation for your real estate investment to grow over time. And if you are not an active trader, you're not an active investor, and you are the type of a conservative, fundamental type of investor where you leave it and forget it, you put your money in some moderate risk portfolio, or even highly aggressive, high risk kind of portfolio, but you know that you don't need to worry about it for a long time. So if you leave it there for long term, you know the upward trend is always upward anyways. But having said that, please keep in mind that the upward trend, both in the real estate market and the stock market, is pushed up by inflation. And inflation itself is the very thing that eats up on the value of your money. So even if your monetary nominal value and your real estate nominal value have gone significantly up, please keep in mind that it is up because of inflation, which means if it's really high up because of inflation, then it means inflation is really high up, eating away at your value as well. So $100,000 back in the 50s, in the 60s, in the 70s makes you a very, very wealthy person. $100,000 today is almost as little as $10,000 in 5 years or 10 years from now. So keep that in mind. Inflation is a real thing when you're choosing your investment. Choose it. Choose how to invest wisely. So in short, inflation is your friend, especially if you owe a lot of money. If you have a mortgage, inflation is your friend as long as your interest rate is within reason. But at the same time, inflation is your enemy, because keep in mind that monetary value, real estate value, or whatever kind of value of gold or whatever instrument you're holding on to, if the value that you are holding on as an investment is pushed up in value due to inflation, then the value that you see going up is what we call a nominal value. But there's two values in every instrument, whether it's money or real estate. There's what we call nominal value and then intrinsic value. Intrinsic value is what actually gives you the benefit of that instrument. So monetary value, paper money or bills, it gives you whatever bill you have in your hand. If you have $20, what can $20 buy you today? Maybe a good lunch at a nice restaurant or fast food. $20 is pretty much fast food nowadays. Fast food in McDonald's, $10 is like the $5 of 5 years ago. So if you have $20, let's say, what can you get? Maybe a good lunch at Boston Pizza, let's say. But if that $20 grow to $100 in 10 years, but in 10 years your $100 won't be able to buy you the same thing, the same delicious meal at Boston Pizza 10 years from now for $100, then you are actually losing intrinsic value, although you gain so much on nominal value. So keep those two kinds of values in mind. Now, I have to, full disclosure, I used to be a financial advisor at one of the biggest firms in Canada, but I am not a licensed financial advisor or financial consultant. I'm not currently licensed. I did not choose to renew my license. So this is not a professional advice. These are personal opinions that I share with you here on the Ordinary Joe Show, Finance, Business, and Entrepreneur podcast. These are all just my own personal opinions and thoughts based on my personal experience as an advisor and also as a day trader for myself. After a few years, I did engage in day trading for a few years right after I sort of took a long, very, very long leave of absence from personal finance advising, consulting, which in the future I have an open invitation from the firm that I used to work to come back with a big bang and resume on serving my book of business, my clients, which is entrusted to the group of associates but they're doing a very, very good job for my clients, and they're their clients too. So I don't worry about my clients that are being taken care of by the same group that I used to work with when I was active. So they are taken care of very, very well. But in the future, I might come back and renew all my licenses and do all that. But for now, I need to hone in and master the marketing side of business. And then when I come back to my personal practice as a financial advisor, then I'll have marketing as well as a tool to build my brand, build my business, build my clients. So I said all of that just to say that all the opinions I express here on the podcast are opinions of my own, personal opinions based on my personal experience and experience of people that I know. And some of them happen to be my client, which always stay anonymous in this show. But their story are the stories that I encountered first hand, second hand, and stories that we learn through many of our training sessions. All of those stories are beneficial for all our Ordinary Joe and Ordinary Jane listeners who maybe in the future want to take control of their own investing, managing their own self-directed investments, to how to manage their own RSPs, how to manage their own TFSAs. We won't give personal advice. And even when I was licensed as a financial advisor, even when I was licensed as mutual fund advisor, insurance advisor, estate planning, all of that financial planning disciplines, even when I was licensed and very active out in the field, I will not give an advice to anybody that I have not done what we call know your client, KYC investigation just yet, because every person is different. Every investor, every risk profile is different. Every goal is different. Every person has different goals and concerns. So unless I know, and if you're working with a financial advisor out there, whether they come from the big financial names, the big financial firm brands, make sure, see to it that the advisors you're working with are really about, they really care about you and your personal profile, your risk profile, your investment goals, your investment profile, your personality, and not just trying to sell you products that are designed for other purpose than to serve your personal profile, right? So don't deal with any advisor who seem to just know everything right off the bat without even doing an analysis, a risk analysis on your behalf, an investment analysis on your behalf. If an advisor is just telling you that something is generically applicable to all, shy away from that advisor. We'll come back in about 60 seconds. Don't go away.
Please don't go away. We'll be right back after these short messages. Hello, a friendly reminder to all our followers and listeners on iTunes, Spreaker, and SoundCloud. Every Wednesday, if you like the topic of food, fine wines, and festivals, every Wednesday, 12 p.m. Eastern, 11 a.m. Central, and 9 a.m. Pacific, we talk about everything about food, restaurants, new restaurant opening in Toronto, events, films about food, and all kind of stuff. So please check us out on Wednesdays on Wednesday podcast here at the Ordinary Joe Show.
Welcome back to the Ordinary Joe Show, Mondays, Finance, Business, and Entrepreneur Podcast. This is our last segment for today. Half an hour is really very fast. Half an hour is not enough time to podcast everything that I would like to share with you. However, scientifically, we have to stick to our format. And what we are missing on today's episode is the news of events that I prepared to share with you. However, that actually takes a lot of time, takes a lot of a big portion away from our half an hour podcast daily. So I'm thinking what I'm going to do with the news is I'm going to create a separate news piece every day, which is another sort of commitment, but I won't promise that it will be every day just yet, but I will try as much as I can create those events, news, podcast segments, maybe separate from the half an hour show, so that you are up to date to what's happening in the city in terms of relevant information. On Mondays, it will be the business networking events, the business seminars, and all that. For Tuesdays, we're talking about technology fairs and all that, new tech, new gadget fairs. We're going to have a lot of those in the city this summer for sure. Tech fairs, tech events, tech meetup groups, Eventbrite stuff. Wednesdays, we are adding. So I might also on Wednesday, especially, I might have to separate that segment on the news about new restaurant openings and events about food. Food festivals, food truck festivals, and food discounts, special discount events, and stuff like that. I think I'm gonna have to separate that from the half an hour show so that we can focus and spend a little bit more time on actual insights about the food business, about food culture that we celebrate here in the city. So it will be the same for the Thursdays and the Friday books, films, and Entrepreneur podcast as well. The fitness and the fashion Thursdays, it will be the same. And I announced this last Friday that for 2 or 3 weekends, we won't have any weekend podcasts because we are on pre-production for those. We are supposed to take a couple weeks pre-production sabbatical from all of the podcast, because as soon as I launched this off, I realized there's really a lot of pre-production and research work that needs to be done. Even just for the half an hour daily show, it's quite a lot of work. But at least we got a lot of the templates put in place already for specific shows for the Monday to Friday at least, and we have to recreate some other templates for the other shows in the series. But anyways, we will build this podcast weeks after weeks, months after months. We will have a collection of bingeable and revisitable episodes for the benefits and for the learning of all our listeners and for myself as well. So going back to our topic just before the break, I was saying don't deal with a financial advisor who doesn't seem to be interested in getting to know you more. And it's actually the law in Canada. There is a rule in the financial business called the KYC rule. And again, as a full disclosure, all of these are personal opinions of mine. Any insights, any sort of advice that you hear on the Ordinary Joe Show are not professional advice. These are opinions, personal opinions, legally a personal opinion of mine from my own personal experience and stories that I learned throughout the years from other people's experience as well. So this is a sharing of insights here, not a professional advice that you can implement on your own investing strategy. Please don't take any of our words here as your own. You have to go and see your financial advisor if you want to implement a certain strategy that we talk about here that you think might be applicable to you. But just make sure that you're dealing with an advisor who really cares about your personal profile. So there's a rule in investment industry known as the KYC rule. KYC is known for is an abbreviation for K, know, Y is your, C stands for client. Know your client. It's the law. It's a regulatory very important part of the process of creating a financial plan for a client is to know your client. It's the law. It's the rule in finances to know your client, and don't invest your client's money or don't put them in a plan that is not according to their goals and concerns and the risk profile. And it is important. The reason we need to know our clients is because we don't, on their behalf, just decide for them what their desires are for their own financial planning. We get their desires. We know our clients. We get to know them. We get to know how much risk they can take. What is their risk tolerance? What are their goals? What are the timeline for their investment? Can they keep their investment locked in for long term, or they need access to their investment so also we cannot invest it in what we call an A fund back where I used to work. It will come back to me what is the generic term for it. But funds that are locked in, we cannot put our client's money on a lock-in fund if a client wants to have access to their cash just in case of emergency, right? And so when I was an advisor, I always have a pot, what I call 3-pot strategy, where one pot is for emergency purposes and one of the pot is for long-term, that the client will not mind not touching it for many, many years to come. And that will be the wealth building pot, which I call. Again, I cannot stress enough, none of what I share here can be taken as professional advice. These are all personal opinions. I currently did not renew my license to give advice on any instrument, any mutual fund. It's a full disclosure that I am not currently licensed. I did not renew my license. I am currently focusing on my podcast. I am not focusing on my practice. In the future, I might desire to go back and get back on the practice of financial planning for clients, but I have to go through the process again of renewing all those licenses that I used to hold. So, again and again and again, please don't take any of the opinions that are expressed here as professional advice. They are not professional advice. They are personal opinions of mine. If I have a client, if I have a guest who happens to be a licensed professional financial advisor, even then, you don't take what you hear from this show as your own personal strategy. You have to take the thought, the insight, or the concept back to your personal financial advisor and check with them if the concept that was shared in the show is appropriate for your own personal needs and for your own personal profile. Again, when we say profile, a client's profile, an investor's profile is consists of your risk tolerance. What kind of risk can you tolerate? Your investment goals, your timeline. How long can you stay in the market? What kind of volatility can you tolerate? Let me give you a very quick example. If you move to a new city and you are looking for a family doctor where your whole family will start seeing because you're living in that new city, and you just met this new doctor for the first time, and the doctor didn't even listen to your chest, didn't even look inside your mouth, or didn't even touch you, just went through a series of questionnaire and told you at the end of the questionnaire that you have to take a certain strong drug to keep you healthy. Would you take it? Of course not. I don't think you will, because you want a doctor who cares about knowing more about you, and that is the same with financial planning. Don't take any of our concepts here as personal advice. Again and again, God bless you all. We'll see you next week on another episode of the Ordinary Joe Show Finance, Business, and Entrepreneur Podcast.